What's up, everybody? This is Suleiman from ACZ, and this is a channel where we talk about the money in business and the business of money. Today, I want to share with you something that we tried at the beginning of the year, and we're feeling that we'll be successful by the end of the year, and that's why I wanted to share this with you. So basically, we had a client come in, and he wanted us to do something extraordinary, if I can say. He had Kenyan shillings, and he wanted his capital to grow by 30%. And that was the challenge he gave us. What we managed to do was a very, very simple thing, and it's tax-free. But we are seeing that we are able to achieve the 30% within the year. And basically, believe it or not, what we just did is have him put his money into dollars and then keep the dollars in an account. Currently, we're on the track to getting the 30% by the end of the year. For those of you who like to know how we calculate these things, let's jump to the computer so that you can see. So here we are, the machine. And basically what we want to do is to try and understand how we were able to forecast that the dollar will increase by 30% within the year 2023. Of course, we have not finished the year, but as you'll see, we are already on track in achieving that 30%. So what I will be showing you right now is how we can forecast, let's say, the rate of the dollar. So on the first column, the first thing that we'll want is the month. So we write the month. The second thing that we want to get is the period. And lastly, we want the rate. So the month, we can start from, let's say, March 2022, and then we'll go to April 2022, and basically we'll continue that way till December of 2023. And we'll name this one as period 1 and this as period 2, followed by period 3, and we can have Excel automatically fill this up by double clicking there. So now we need to find the rates for period 1, which is March 22nd. Now there are a lot of ways you can get these rates. The fast and easy one is to come to the CBK, the Central Bank of Kenya website, and then come to the Forex exchange rates. And once you're here, you can select the start date, the end date, the currency you'll select as dollars, and you can have the historical prices for you. You can also print, you can download it as a CSV file or an Excel file or a PDF for you to analyze further. But because we're interested with the 18th of March, I usually look at the prices on the 18th for my own personal reasons, but you can pick any date, but be sure to be consistent every month for that particular date. So for that particular date, it was 144.38. So I'll come back here and type in the rate as 114.38. Sorry, it's not 144, 114.38. Okay. So another way you can get this is just by typing USD/KSH on Google and you'll find this. Yeah, the rate for today. But you can come here, click on 5 years, then you look for March. For example, we're looking for March 18th, right? So I can come 18th March. Here it says it was 114.40. And as you can see, it says 114.40. So there's a small variance of 0.02, which is not important for this case. But then again, we'll have to fill in all these dates of the same exact date of the month. Yeah. So if it's 18th, it's 18th for all of this. I'll save you the time and we'll just jump in where I already have these dates. The next thing that I want to do is to calculate the percentage change. So I can have here a column for calculating the percentage change, right? And the percentage change will start from April because we have something to refer to, is equals to, we'll open a bracket, this less the previous one divided by the initial one, right? Which is the previous one. And once you get that, you'll get it's 1.13%. And if we double click on this, it can calculate for us. And as you can see, there's some months we got 0.61% change, 0.91% change. And there's some months we got 6.05% change, 2.17% change, right? So that means that it fluctuates. But what we want right now is to have the average. So I can say here, average change. And we'll calculate this equals average of, we'll select all this and close the bracket. So it gives us as 1.47%. That is the change. So now we can explore 3 different options for us to forecast something. Yeah. So the first one, we can use the formula, which is the future value formula. So I'll just type in here, formula, and I'll try and ink this in so that you can understand the formula. So the formula is FV is equals to PV into brackets 1 plus R, close the bracket, raised to power N. Okay, so we have that. Let me just insert this one here, and we have it just here. So basically, what it's telling us is that the future value of anything equals to its present value into brackets 1 plus the rate of growth, which now we have an average rate of growth, close the bracket, raised to the number of periods that we have. So based on this, we can say the future value of this rate. So we can say this rate, and we'll lock it because it won't change. We multiply it by 1 plus the rate. Now, this is the rate that we found. And then we'll raise it to the power of N, N being the period. We have to lock the rate because we don't also want it to move. And then once we have that, we can just double click and have the rates there. So this one is actually forecasting that, let's say in May 2022, we actually got 115, but it forecasted at 180. We forecasted 119, it got 124. We forecasted 120, we got 127. And why is that the case? Because for a long period of time, we never reached this average. And this average is what is bringing us this one. So it's these two that actually raised the average. And because they are, if I can say, outliers in this sample, that's why we are having higher numbers here. But as you can see, there's no negative number. And also the percentage changes, there's no negative. So the dollar rate never goes down, it just goes up. The second way we can get this one is using the forecast function in Excel. Okay, and the forecast function in Excel basically equals forecast, and it's this one here, and it asks you what is X. So X is actually the period, okay? And it asks you for the non-Y's, which is the rate. So we already know this as fundamental truths, and the non-X's are the periods, okay? So we'll close this out. But what we want is to lock all this so that the data set doesn't move. Yeah, the only thing that should change is the period. And then we'll press enter. But now it projects that for this particular period, we should have been at 109. And once we click like this, you'll see now what's happening here. So again, we come back to, let's say, in April. So the real value in April was 115.1. The formula gave us 117.17, and the forecast function gave us 111.55. We look in October, it's 149.9. The formula gives us 152.3. Forecast function gives us 145.67. So there's a big variance. Of course, the actuals are in between the formula and the forecast function, but we cannot assume that it's the average of the two or something else. So I'll give you a better option, the third one, which I think is really good at exploring this. So what we'll do is select this data with the headings, of course, and then we'll come insert a recommended chart, and we'll look for a scatter plot. So this is the scatter plot, and we'll include it here. So once I've included this scatter plot here, the first thing I want to do is rearrange everything so that we can see clearly what's going on. And here, I will say the minimum should be around 110 so that you just see that. Okay. It's easier now for us to see what's going on. So from this point to this point, I would say it's kind of a linear kind of increase, but there's a bump, and then there's also another kind of a linear increase. Okay. So the models, meaning the forecast function and the formula, are having a hard time dealing with this bump because it's not linear. If we right click on any dot and then come to add a trend line, we get that. If we add a linear trend line, you can see that it touches like 1, 2, maybe 3, and then 4. We can also count that 5 points out of the possible 20 points. So that's a very low number for us to be comfortable with. You can try and explore if your data set is exponential and stuff, but I think the best one that explains disjointed kind of things like this is a polynomial. So I'll give it a polynomial kind of thing. And you can see right now it's kind of hugging majority of the points except here. Okay. So while we're still in this tab, I'll want to select display equation on the chart so that we have this equation here. So I'll put the equation here. And now basically we can solve for y. And what is y? Y is the actual rate. Yeah. So one thing I want here to write is the x, meaning the period. And I'll put them like that. And then the other thing is the rate. But this one I'll write E, meaning it's an estimate. Sorry about that. That's the shortcut for the euro. I'll do that. Okay. So that means if we put an X, I want it to return a rate. Now the rate, which is Y, is actually equals to 0.0938 times X squared times X raised to 2. So I'll put brackets so that we are able to control the formula rather than the formula controlling us. Here we are explicitly telling it the order of operations, but Excel already knows that. Next, we less 0.0734 times the X again, and then also that I'll put them in bracket, and then we'll add 114.97, which if you've done statistics, you'll understand 114.97 is the y-intercept, where the line meets the y-axis. Okay, then I'll just press enter and we'll get 114.97, which is the intercept. Now, we wrote the formula denoting x to be this cell. So now, if, for example, we want to check period 2 based on this graph, if I press period 2, we get 115.19. So what I'll do is make it 2 decimal places. So now we have 115.2, and in April we actually got 115.1. But it's actually closer as compared to what the formula gave us and to what the forecast function gave us. Now, if we check, let's say at period 7, we get 119.05, and in period 7, we have 120.20, but still our value is better than the formula or the forecast function. If we check at the most recent, let's say in August, which August is period number 18, we get 144.04, and in August we had 144.2. So now this one can kind of clearly let us know what is really going on. But of course, there are some that have wide variances, meaning the actual form what we put as a trend line, right? So this, for example, is period number 12. So if you put a period number 12, we'll actually see that it's higher than the actual, because here it says 127, and period number 12, it was 124. But you see, we are not off as compared to where here it says 135 and 130. So this one is better. Now, based on this, we can extrapolate, let's say till December 2023, and ask ourselves, okay, for period 21, how much would the rate be? So it will be 154.79. And I've put it in red so that we know that these are estimates because we are not sure yet. And for period 22, this is 158.75. Okay. And we can bring down this one as well as this and this. And all these, we'll put them in red. Okay. So now when we were given this challenge, we had data till December. Okay. And we needed to forecast the rest so that we can have an annual rate. Yeah. And basically, if I just come here and say this one equals to this less what the rate was in January, and then we divide that with still the rate in January, that will give us the percentage growth. Okay. And as you can see here, if I put this in percentage, you can see it's 28.55. Okay. So it's not the 30% that I claim that we'll reach, but as of the forecasts, it's about 28.55%. Now, if we look now in January, meaning that we cover the whole of December and look in January, what the rate will be, that is period number 23, you can see that we'll have grown by 31.9%. So we are in between 28 and 31.9, meaning we are around there 30% by the end of December. And that is what we managed to do so far. We are at this point in October, and we feel like the rest of the 2 months we will be able to meet our target of 30%. And basically, another factor that we should be honest and we should let you know is that the rate at the central bank, the one that's given here, you can get a higher rate than this. For those who have changed dollars and stuff, they know there are forex bureaus that are actually offering more than this. You can even just look at them on Twitter and stuff, and they usually post their daily rates, which are 5 shillings to 6 shillings higher than this. So even in October today, the rate is higher than actually this in the streets. Yeah. But the central bank, it's that, and the calculation we have done is using the central bank data. Okay, so this clearly shows that it's possible for somebody to grow their capital by 30% in just investing in another currency. I don't know if you have tried investing, but 30% is something that is really, really positive because money markets will not get you close to this 30%. Money markets won't even get you half of this. Because if we look at this article right here, it was written July 7th, 2023, and you can see these are the yields for money market funds, and it's between 11.17 and 9.55%. And even if you invested in the stock markets will rarely give you 30%. And this is including the dividends that they pay. So at the end of the day, you have an opportunity to get more money, hassle-free. But then again, it's not a guarantee like investment or anything. There's a lot of risk associated with it. But for us, we were really confident and we were certain that this would have been possible. And since you already have this basically set up with the formula and everything, you can now extrapolate. For example, we can select these ones and just drag till somewhere there, and we have December 2024, meaning that it's period number 34. So you can just come here and change the period now to 34, and based on this we are extrapolating and saying that we're estimating the dollar will be at 220.91, and that will be a 78.87% as compared to January of 2023. So basically, you can now see how you can use this information to your advantage and make some money. So there you have it. This is how we are envisioning of achieving the 30% challenge that was given to us by our Kenyan client. And we are happy and excited that we managed to achieve this. And if you want to learn strategies for investment, for example, and also how to make money while you're sleeping, then this is the channel you should be following. So make sure you subscribe and also hit the bell notification icon on the side there so that you're always notified once we upload such videos. And until the next time, build your future today.